Hello everyone, and welcome to this very short video that I'd like to do today to address a question that I'm often asked by traders and investors, and that's to do with why markets sometimes go up on what seems to be low volume. But before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. Trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Okay, to get back to this question, and the question is usually phrased as, well, market's going up, but it doesn't seem to be supported by high volume. I would call it healthy volume, as it were, solid volume. And the short answer is yes, markets can go up on what does appear to be not very high volume. It is anomalous, and it can carry on going up for a little while before, if you like, reality does sort of come into play, and we do get much stronger anomalous signals. So for example, you get very wide ranging bars or candles with very small amounts of volume. But I just want to apply that question to the SPY again. And one of the reasons I've used the SPY is because it is probably the most liquid, I think, of all instruments that I think globally. I think I've looked up the number of participants in this particular ETF, and it is absolutely staggering. It's just the numbers are incredible. And we really want to have a look at, this is the daily chart. It's obviously closed at the moment because it's only live with the physical market. And as we can see here, we have seen the sort of reversal in sentiment in all the indices, actually, despite what's going on in the background, despite the very tragic situation that's been unfolding in Ukraine, despite the inflation, the inflation that is with us at the moment. The bond market signaling recession, potential recessions ahead, but the market seems to be it's almost shrugging it off, at least for the time being. And of course, it's also shrugging off the Fed's intention to raise interest rates 7 times, 8 times this year. Who knows? The reason for that? Well, I suppose the most obvious one is maybe the market just doesn't believe the Fed. Maybe, the economy is going to be in such a poor state, despite the inflation, it really can't afford to start ramping up interest rates, at the rate and pace that they should be doing to tackle the inflation. I appreciate some of the inflation is things that they can't control, and there are things that are coming down the line that they really can't control, because if there isn't a resolution to what is happening in Ukraine, we are going to see some very severe increases in food prices, which are going to cause all sorts of civil unrest and poverty and distress in a lot of countries around the world. Anyway, to get back to the market seems to be quietly going in on its own way. And if we look at the SPY, we've had this reversal here back in the middle of March, and if we look at the volume underneath the candles in this trend higher, I think I read somewhere it's one of the the strongest trends that we've seen for some considerable time. And we could certainly see, some decent volume under this candle here. It's got a nice wick to the bottom of the candle, and it didn't quite take the price to the volume point of control that we have here, which is just this is 435. It's about 438, something like that. And the next candle then comes in, which is, it's almost the range of this one, but the volume, again, this is what I'm saying, it's okay, but but it took the price action over the volume point of control, and on we go. And as we can see here, the volume kind of is falling away slightly. We have a little down day on there with sort of so-so volume as well. And then we come to these last, yesterday's session and the end of last week. And once again, we can see from the volume numbers that appear on this particular platform, and looking at what the average volume should be for the SPI on a daily basis, it is light. That's all I can say. But that doesn't invalidate the fact that the mark, it's still going up. It's still being marked up higher. For traders, being aware, looking at the price action, looking at the support and resistance, you simply have to trade what you see on the chart. I think for investors, it's another discussion. It's another, it's a completely different scenario. And is this now a good time to to think about getting into this market? And where is this market going to? Well, the obvious is obviously to go way ahead and test the all-time high. We do have this strong resistance in the way here. Is it going to get there? We just have to wait and see. I haven't got an answer for investors, because investors, they all have different criteria for entering and exiting markets. But all I'm saying is that I would see it as more of a dilemma, rather as opposed to a trader, because as a trader, you trade it whether it's going up or whether it's going down. Now, yesterday was also an interesting day because we had a gap up because the futures were quite strong in the morning. So if you like, you do see these gaps in the cash markets where they are, they're also backed by the ES, the futures, which is obviously trades 24 hours. So you have a little bit of, at the open, you have this situation where there's either going to be a catch up, or there's a gap down or a gap up, and then everything kind of settles. And it also highlights this issue where you have these 24-hour markets, and you also have cash markets. Those of you who know me will know that I also trade Forex. I've written about Forex, I write about Forex, I do webinars about Forex, and that is obviously a 24-hour market. But even within that 24-hour market, there are sessions. There are very distinct sessions. There's the Asia session, there's Europe and London, and then there's the North America, the New York session. And at these, what we call these session crossovers, you will see a lot of volume coming in. You will see prices being racked about. It's a great excuse for trapping traders on the wrong side of the market. Now, what I've got here alongside the daily chart of the SPI, I've actually got the 3-minute chart for the ES, which is the June contract, and this is what the futures are doing at the moment. And we can see that the times when we get the volatility coming in. We know there's volatility because I've got this volatility indicator which triggers. It's when the price action is outside of the average true range. And what do we have here? This is 7 o'clock London time. This is the start of the European session. What happens is, prior to the open, you get the market going up very nicely, and then bang, at 7 o'clock, a lot of traders do get trapped, by the way. They see this nice move higher, the volume's been rising, 7 o'clock comes in, and you do have a lot of volume coming in as the Globex traders join, the European Globex traders join, but you have volatility. This is triggered, and one of the reactions we know you're going to get when this triggers is the price is going to either reverse or congest within the spread of this candle, and it does, and then it carries on lower. But the trap is laid on the traders who are long. I mean, yesterday was a good day, so the assumption is it's going to carry on higher. In fact, it carries on lower, and then at 8 o'clock, which is when London opens, you get exactly the same reaction again. Now, we've had an interim reaction here. I think this is on the news that is going on with regard to the peace talks that are currently underway between Russia and Ukraine. There's a lot of flip-flopping, you know, as inevitably there is, and markets are pretty much responding at the moment to what is going on, you know, in this very sad and difficult situation. But again, just after 11 o'clock, probably a piece of news. The price action was quite happily trading around the volume point of control. Not a lot of activity going on. We know that because this is a very, very special indicator that we've developed. It's called the tick speed. And when it's in red, it tells us there's very, very little activity going on. Suddenly, the price comes down. There's the trigger once again, and once it goes into the spread. Another one is actually triggered again into the spread of the candle, and gradually we do get this, you know, the reversal higher, as it were. Support and resistance levels are key all the time. You can see you've got some very, very nice candle patterns, tweezer tops. This is almost a perfect example of a tweezer top, where you've got I wouldn't say the candles are the same size, but the wicks are identical. And you know, when you see that happening, you know there is going to be a reversal. And this is where support and resistance comes in. Well, where's it going to go? And it's going at the volume point of control. And we've now had this break lower. So this is what is going on in at the moment in Globex, in the ES futures, and you will see the impact once the physical market opens for the SPY. And as I said, this is where it ended yesterday. If we look at the daily chart for the ES, we can see here we are. This is yesterday, you know, a solid candle. Again, volume, I would say nothing to write home about, but you know, as I said, markets go up, they're marked up, and as a trader we have to be aware and just trade accordingly. And this is what we're seeing. We're seeing this pullback, you know, going on at the moment, that we can see on the 3-minute chart. So as as we come to the physical open, if you do trade the SPY, or you trade any of the cash markets, let's have a look back here again, I really think you need to, two things you need to be aware. Be aware of what the volume has been in the preceding sessions. As I said, be on alert, as it were. Keep an eye on what is happening on Globex, and you know, is Globex, what is that pointing to? You'll see it in headlines. You'll see it in headlines on sites such as investing.com, where they say, well, in fact, I've just pulled this up and the headline is here: Dow Jones futures fall 80 points, etc. You will see that they already point you in that direction, but also be aware that there's an awful lot of trapping that goes on at the open. And if you like, my suggestion is use something like the 10-minute chart, because the 10-minute chart stops you kind of jumping in too soon. So if I pull up the 10-minute chart, yeah, that's a really nice example of the 10-minute chart. This is obviously, this is just the SPY. This was yesterday. This is where it ended. Then we had, represents obviously the gap up that we saw on the daily chart. And you know, if you were a day trader, they'd seen what had happened you know, yesterday. Are you going to follow it up higher? Yes, everyone followed up higher. But then what happened? You know, down it goes. You know, there's a lot of racking about on the faster time frames, as we see here. Watch the volume, and again, the volume on the faster time frames, it's not what I say. It's still going to go up on low volume, but it's easier to read in a way. We can see this is a really nice example. It goes up, volume is really very, very poor. We have, look at the candle patterns, we have a 2-bar reversal there, a 2-bar reversal there, and then you have that falling away, but look at the volume in the down candles. Is it increasing, which is what you would expect? It also stopped at a significant price-based support, which is the R3 pivot here. What have we got? We had another we had an engulfing candle here, a reverse that didn't go very far. Back you had a lot of testing. When you are trading around these key support levels, you have a lot of testing. And then eventually, as I said, from when it opened, it took a couple of hours where we did have, as I said, the 2-bar and a little bit of increase, and in fact it then did, the volume did start to increase as we went into towards the end of the session, back to its volume point of control here, from where we've had a sort of a round trip, as it were, and we've ended up with well, 2 dojis. Is that a hanging man? There's a lot of volume underneath it. Let's wait and see. But the clue may be in what is happening in the futures. But to go back to the my original question at the beginning, can markets go up and down? But equity markets, they have the bias is to the long side. Can they go up on keep going up on low volume? And the answer is yes. But at some point, reality will kick in, and that's when you see the more pronounced anomalies, where you will see maybe lots and lots of volume coming in, but very, very compressed candles. Okay, that's what I wanted to cover in this particular video, just to give an example of what is healthy volume, what is solid volume. I'm actually going to do a video about Apple, which is really on a tear at the moment, and just to give you a comparison, a contrast to what I suppose you should be seeing when, as I said, you have a good trend validated and supported by very, very strong volume. So thank you very much for joining me for this session. I hope you've enjoyed what I've had to say. Just very quickly before I go, the indicators that are on my charts are the ones that David and I, my husband David and I, have developed for ourselves and now available to purchase. They are from quantumtrading.com, and you can go there and you can find out a little bit more about them. I've been using the ones on NinjaTrader, but as you can see, they're available for MT45, TradingView, and TradeStation. So thanks so much for coming along, and I hope you'll be able to join me next time.